And local trade is in desperate need of gains after stocks fell for a third day yesterday. The JSE extending early losses to close about 1.4% down. It's the third straight session of declines amid concerns over rising Treasury yields, disappointing corporate results and the escalating conflict in the Middle East. So let's get some analysis of the latest market moves, and we're joined now by Roy Mutooni. He's at Sanlam Investments, an analyst there. Roy, good morning to you and happy Friday. Let's begin with that quick overview of the latest market moves and what's influencing trade this Friday.
Hi, thanks for having me. So nothing different this Friday. I think the top 40 is opened about 1% down. The only things that are up are gold shares. Everything else is well down. Commodities, banks, SA Inc., dual listeds, everything else is down apart from this because of, and I think the real driver of that is geopolitics. I think the market's really nervous about what's going on in the Middle East, what's going on everywhere else like that, and the market really doesn't know what direction to go, whether there's going to be escalation on that from that front.
Let's talk about Sunlam Alliance management, and it's fended off questions from investors who feel, Roy, that the dividend payout ratio target of 65% to 75% sets the newly formed joint venture too high. Talk us through those developments.
So Sanlam, the South African insurance giant, and Allianz, which is a German giant as well, formed this joint venture on their Africa businesses. What they've agreed is that those Africa businesses, out of the profits, they will pay up 65 to 75% of their earnings as dividends. Now, the thing is, investors are a little bit concerned that this doesn't leave much money for reinvestment. And also they say a lot of these African countries are currently having problems repatriating money out. But in discussions management had yesterday, they basically said if they need to buy any new businesses, they will come back to shareholders. And at the time of repatriation, if any of the countries are having problems with dollar availability or any of such thing, they'll focus on the countries where there is more liquidity. It just seems like it's a joint venture between willing partners, so this is a discussion that will continue over time, and they'll be able to come to amicable agreements in particular.
Let's continue with company news and talk about Discovery, which has flagged the implementation of the National Health Insurance in its current form as the second biggest risk facing the group. Second to that, only to the global rising cost of living crisis and higher than South Africa's energy constraints. Your views on these sentiments, Roy, and what changes does Discovery hope to see?
So I think their real concern is how this NHI is proposed to be funded. It looks like it's going to be funded from trying to increase taxes, and according to Discovery, you already have an overtaxed small tax base as it is right now. Taxpayers are already stretched. By any level of statistics, we're among the highest taxed in the world. You can't extract more taxes out of that to fund anything else. They agree that universal healthcare is extremely useful and it's the right thing to do. But what the problem they have is they say this form of funding through increased taxation is not sustainable and doesn't give this initiative the legs that it needs. They would like to be consulted. They would like the people on the ground, the doctors, the nurses, and people like that who will be involved in implementation to be consulted for their views and an alternative funding method to be implemented as well. This is a debate that's been going on for quite a long time. Government hasn't really budged. Let's see how far it goes.
Yeah, let's conclude the conversation with a report which shows that Airbnbs have more than doubled in its contribution to South Africa's economy in the year 2022. What does that mean for the sector?
So I think the statistics they were quoting was basically a significant recovery post-COVID. As you remember, during COVID, all of these accommodation venues were shut down. But I think what they're trying to point out is that these informal landlords are actually quite significant. Moving away from actual registered hotels and places like that, they're significant. They employ a large number of people, and it also creates income for these people and the landlords as well. And they deserve to be taken seriously by legislators and also to be incentivized to keep growing. They're already a significant component of the economy. They provide alternative accommodation and they provide employment. So I think that's what that statistic is meant to emphasize to legislators and to the public at large.
All right. Well, very important moves there, an encouraging report for the tourism sector in particular. Roy Mutooni, thank you very much, an analyst at Sanlam Investments.